Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Alright, I think I'm getting my head around Tesla's ramping of the new factories, along with Tesla's factory capacities and alleged capacities. We all know how vocal Elon likes to be about volume production, equal or higher to a run rate of 5,000 vehicles a week, a rate at which no other EV manufacturer in the world has achieved. Okay, except officially for the Wuling. But I really don't count that. It's not the volume production I don't count, it's the vehicle classification. I think it's a stronger competitor to an electric bike. Anyway, so EV volume production is Tesla's achievement, and Tesla's alone. Except Tesla haven't stopped at volume production. Tesla have reached high volume production. And we have these new factories that claim to be able to eventually produce a Model Y every 45 seconds. However, we've also heard that these factories have been referred to have a capacity of just 500,000. In fact, that is what Giga Berlin is currently permitted to in production capacity. Elon did also say in a tweet one time that said about 10,000 cars a week with about 75% uptime to kind of somewhat further reinforce this particular run rate. However, we have also been watching the Shanghai Model Y factory for some time, since it was just dirt. We watched the factory go up in record time and then producing at insane rates, up to over 10,000 units in about its third month of production. FYI, Berlin is now in its fifth month of production, and we're only about half the way of the Shanghai progress. However, that does look set to change, as Giga Berlin is also going to face a 2-week shutdown and expected to open back up at twice the capacity, so perhaps at the 10,000 a month figure, which I would also guess must be close to break-even operating profit for that factory, and that's the run rate for the start of the quarter, albeit having to close down for 2 weeks in July. Either way, we should expect Berlin to potentially be profitable this quarter, and I would guesstimate a production of around 15,000 units in September at the end of the quarter. I would feel comfortable guessing 25 to 30,000 Model Ys total for the quarter, which I believe is more bullish than most estimates, but still early days. We will have to see the effect of the new upgrade. But when Shanghai was ramping, it saw jumps as high as over 10,000 additional units month over month, and we would hope that Tesla can jump faster with all the new manufacturing techniques and experience they now have. Anyway, it was actually at Berlin where we first saw this production target of one vehicle every 45 seconds. But we also saw that the Berlin factory looked bigger than the Shanghai Model Y factory. And on top of that, Tesla need a lot fewer robots and less floor space when compared to Shanghai. I would say Berlin has additional floor space being unused for now that is for future expansion, and actually possibly some of it being utilized in this latest update we're going to see in the line upgrade. Perhaps this was foresight, seeing the upgrades and expansions they had to do in Shanghai, meaning that they can likely upgrade the lines much quicker in the new factories. Not that we've really seen that occurring yet. Elon did say he expected them to ramp faster in these new factories though. He didn't say that they would take longer to get set up and running. They are meant to be faster in every capacity. Is it possible that these new factories are more expandable though, and future expansion has been considered? Texas is already building an extension. Tesla are going to be upgrading these lines and extending them along with the actual physical building of the factories. Tesla built as much factory as they needed to get started in producing cars as quickly as possible. From there, they can build and expand the perfect factory as they have more time once the vehicles have actually started production. Just like we're seeing now with Shanghai shutting down and all the continual factory expansion they've been building, whatever the bottleneck is on the factory floor will be the next part of the production line that requires attention, and whatever needs to be done to remedy said bottleneck will be done. Like I'm saying, even if it requires a whole new fab, just for a cathode factory or something. My point is that Tesla are not going to reach a run rate of 500,000 units a year and call it a day and start another factory. Every single factory they have, they're going to be refining and improving. Elon talks about 50% growth. This cannot be achieved at a linear rate of building 1 or 2 factories every year. Before long, Tesla will have half a dozen locations. If they build 2 new locations in a year, then that only becomes 33% growth. I don't think Tesla can accelerate their rate of building factories. Of course, the factories we really are referring to are actually the cell factories, as that is the bottleneck. So just to explain again with easy numbers, when Tesla has 10 factories, if they're building 2 a year, then that is a 20% growth rate. Elon thinks he can maintain 50% for the next 10 years. Where would the other 30% of growth come? Again, with easy numbers, let's say that each factory produces 1 million units a year, and there are 10 factories, i.e. 10 million units a year. Then with the addition of 2 new factories, it would increase to 20%. And yes, I know when Tesla builds a new factory, it takes a little while to ramp up to, but I think we're getting unnecessarily into the details there. Anyway, if these new factories also produce 1 million units a year, and sure, I know they need to ramp up too, but equally, last year's factories are still ramping, so it is relative, but it assumes a capacity of 1 million units a year is a cap, and growth comes from building new factories. But Tesla can't build 50% more factories every year. It becomes impossible. The exponentials get too big. Therefore, there is no cap on capacity, at least for the next decade. In this scenario, it would essentially require the existing factories to increase an average of about 30% in capacity. Now that would be 30% each and every year. And maybe with a 1-year time delay here, due to it taking perhaps 2 years to ramp up the factory and only 1 year to build, thus the 1-year discrepancy. But either way, we've discovered something here. Now, what if the Texas Model Y line hits a run rate of 500,000 units a year next year, like planned? But that line keeps increasing in speed by 30% each year. Now, actually, I don't think Fremont will be increasing at that rate, nor even potentially Shanghai. I think it will only be for the more modern facilities with structural packs. It sounds like there is a lot more potential in those lines, the way they've been designed for future expansion. So by the end of the decade, if Texas did continue to increase at a rate of 30% a year, then it should be on a run rate of around 2 million units a year. Now, a lot of us, myself included, have commented that the potential capacity of Texas for the Model Y is possibly up to 2 million units a year. And we justify this with all sorts of math. But obviously, the sheer amount of 4680 sales, they have to go somewhere. Admittedly, I think most of us had a time horizon of the next few years for that to occur. But perhaps it will take the rest of the decade, and it just takes that long for Tesla to improve the lines to this astonishing speed. Or is it the fact that Tesla can just always find ways of improvement? Right, now let's not forget that this is an absolutely insane speed to be producing a car. That is one coming off the line every 16 seconds. And remember, that's per production floor, per factory. And Texas already has 2 floors. Don't forget the Cybertruck. The Cybertruck is a different kettle of fish, of course. No need for a paint shop, and it has an exoskeleton. So it will be very interesting to see how that ramp goes. It will likely change low-cost vehicle production as we know it. So what am I getting at here overall? Well, I think that we need to stay focused on ramping speeds. Last year, in Shanghai Model Y, we saw some months that jumped in production with rates increases of over 10,000 units month over month, which at the time was more than a 30% jump, just over a month. The capacities of these buildings are grossly understated, but only in a sense. I'm not sure we can actually call it sandbagging. 500,000 is probably a reasonable run rate to target within perhaps 12 to 18 months, which is about the time it takes to get the line running. Once there, the line is upgraded and expanded continually over time. Tesla's factory capacity is like fashion. It's never finished. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.